Hello and welcome to the Pine Street Capital YouTube channel where we talk all things trading and investing. My name is Ron and I'm the managing partner of Pine Street Capital. I've been trading for over 6 years and today I'm going to be giving you my market analysis for the 7th of February 2022. Now we're in a very interesting period within the markets with the whole shift of central banks along with Ukraine-Russia tensions and the global supply chain constraints. Now, I'm going to shift over to the charts so that you can see what that looks like on a visual level. All right, I just hope you can see my screen at this point in time. There we go. So we're going to start off this analysis with the US 30, that is the Dow Jones Industrial Average. That's the 30 largest companies in the United States. So last week, as I said, we were likely to get a breakthrough this level, and we finally got it. And we didn't get it with much follow through yet. Right now, we've gotten a pullback right back to this level to retest. And what I'm expecting the most likely outcome to be at this stage is I am expecting the market to rocket up, right? So from here, we've retested this level. I'm expecting us to get some continuation to the upside. However, there is a better risk reward trade to the downside, which could take us down potentially to over there. I think it's unlikely. However, it still is a possibility. And what us as traders, we trade the setups as they present themselves, right? So that's what I'm expecting over here. And we actually got quite a strong payrolls report on Friday. So that definitely speaks to a much stronger labor market in the United States. So moving on to the Nasdaq, tech-heavy Nasdaq, we got quite the rally last week as well. And as I said, this was the significant level we were looking to break. We got a break, retest. Now, these markets are correlated, so you can expect them to essentially be moving in tandem, right? Same thing with the S&P 500. We got the huge rally up. We broke this level, rally up, and now we've sort of come back to retest. And after a retest, most likely outcome is more upside. Now, with the FTSE 100, as I said, we were likely to get some sluggish movement, and that's essentially what happened, right? But sluggish movement round about the highs, but path of least resistance is still to the upside. So we can expect more of this kind of action with the FTSE 100. Now, the FTSE 100 has an inverse correlation with the British pound. So pound goes up, FTSE goes down. And as you remember, last week I mentioned that we were getting some significant news out of the Bank of England, which increased, which had its second increase of interest rates. That's the second consecutive interest rate increase, which hasn't happened in quite a while. So that obviously drove the pound up and caused some friction with the FTSE 100. However, we still were able to maintain elevated levels as we are sitting near the highs on FTSE 100. But we'll discuss that later on. Now, the really interesting story right here is the euro. The euro has completely rocketed up and it has surpassed my expectations in terms of the upside. Beginning of last week, we were trading around about here, and my expectation was that we were going to get some upside in the euro. And my expectation was for the upside to reach about here, but it completely surprised me with a shock move that that got us to around almost the 115 level, right? So 111-ish to 115 is a huge move for 1 week in the euro, right? And the reason we got such significant movement in the euro is because of the pivot that the European Central Bank made last week. So last week, the European Central Bank came out, particularly Christine Lagarde and Not, right? So they came out last week. Last week on, I think it was Wednesday or Thursday, we got an ECB meeting right after a rate increase from the Bank of England, right? So at that point in time, what happened was after the rate increase from the Bank of England, the ECB left the deposit rate and the lending rate unchanged, right? So they didn't increase interest rates. However, within the press statement, Christine Lagarde pointed out that inflation for the Eurozone in January was 5.1%. And inflation was likely to stay high for a long time. And then Not then came later on and mentioned the fact that, sorry, just a second here. So Not then came out and said that the European Central Bank would be likely to increase interest rates, and we're expecting probably 2 rate increases from the European Central Bank this year, and the first one being as early as the 4th quarter of the year. So we aren't expecting any rate increases from the ECB anytime soon, but at the tail end of the year, we could be expecting rate increases, right? So onto the pound. The pound, we got the rate increase that we were expecting from the Bank of England, and the upside that I mentioned last week, we got it, and we've gotten somewhat of a pullback right now. However, the Bank of England is still somewhat hawkish. Could we get 3 consecutive rate increases? I doubt it. However, there's another factor that, political factor that's coming into the pound this week, and that is a potential vote of no confidence in Boris Johnson, right? So a few of the members of the party have sent in letters of no confidence, and a few more, and we could have a potential vote of no confidence vote in the coming weeks or months, right? And that's one thing that's definitely going to play into the pound volatility. However, as for the direction in which the market goes, that's a bit more uncertain. But long-term direction of the pound, given that the biggest factor with currencies is the interest rate, right? The interest rate of the country is mostly what drives its direction. And as long as interest rates are expected to go up, the path of least resistance over the long term on the pound is to the upside. So right now we've hit a significant level of support, and I think most likely scenario is we move higher from here. Okay, and that's my expectation of the pound. And moving on to gold. Gold, we've had some huge moves over the past couple of weeks. As you saw, week before last week, we got huge downside, and then we got a bounce, right? We got a bounce off this level over here, and I think path of least resistance is still to the upside. However, this kind of volatility definitely still expected, and gold obviously is quite a strong relationship with inflation, right? And we are getting CPI data coming out of the US this week, along with, I forgot to mention, the UK, which is releasing its GDP figures. So those are 2 events on the economic calendar that we're going to want to look out for. Okay, so on gold, we're expecting a slight move, to the upside over here. If we do get to these lower levels, it does present a major buying opportunity. However, I don't expect gold to break this low at 1780. So that's my expectation on gold. And oil. The oil story is obviously has a strong relationship with what happens with the Russia-Ukraine story. And President Macron is expected to speak with President Putin this week, and we'll wait for the outcome of the meetings they have over the next week. However, oil is expected to reach the three-digit levels. That's $100. Some analysts expect oil to go as high as $120. So path of least resistance is to the upside on oil. However, I would not be buying at these levels. What I would do with oil is I would wait for it to go back to retest this level before moving right back up. So I'd be buying a pullback on oil, and that's the oil story. Then Bitcoin, another one that's had a significant move over the past week, and we finally broke through this 39,000 level, right? So last week I did mention that we'd get a lot of friction round about this level. So if you did buy Bitcoin at the lower levels, then this might be a good area to offload. However, you'd have to be willing to give up the potential upside with a highly likely move above the 40K level. And we got exactly that. So we tested this level quite a few times, came back down, and we finally got a break above the 49K level. Now, Bitcoin sits right at the top of this range over here. And right now, I think path of least resistance for Bitcoin is still to the upside. However, we should get some kind of a pullback before continuing further to the upside. Okay. And I think the retest could happen somewhere within this this area of consolidation that we got into over the weekend, or it could go as low as 39K, right? However, 39K I think is less likely. We get a retest of this zone over here, and I expect Bitcoin to go to the upside. However, we are going to be met by strong resistance around the 43K level. Okay, Ethereum, well, Ether. Ether actually had a similar move correlated with Bitcoin, obviously. So we got a breakthrough this level, retest, and ETH, I definitely be taking a long position around about these levels, given that we've gotten the break above this level of resistance right here. So I expect the path of least resistance for ETH to be round about, well, to the upside, essentially. So those are your major markets covered. If you like this kind of content, please smash the like button and subscribe to our YouTube channel. And if you like more content like this, educational videos, trading tips, live streams, Q&As, you can join our Telegram channel using the first link in the description. But other than that, I'll see you in the next one.